Now, let's say you're just starting off in your investing career, you funded your brokerage account with $5,000, but you're not necessarily sure on where to go from here. Now, this is definitely the case for many investors, especially when starting off. There's so many different stocks and ETFs that all offer different things. It can be very confusing to know what to do. So in this video, what we're going to do is talk about 5 very high quality ETFs that offer various amounts of income and or growth potential, but have all offered a nice positive total return since inception. I'm going to share with you guys what to do moving forward after you fund your brokerage account, especially if you're just in the early days. We're also going to dig into every single one of these 5 ETFs that can either be a part of, if not your entire portfolio as a foundational base. So if this interests you at all, make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now, like I said during the intro, let's say you're just starting off, you have a $5,000 portfolio and you want to become a successful investor, especially when it comes to dividend investing. Now, there's really 2 levers when it comes to becoming a successful investor to begin with, especially when it comes to dividend investing. You're either going to need upfront a ton of money to really get your portfolio going or a ton of time ahead of you. Now, the good thing about investing is that you don't necessarily need both. As long as you have a decent amount of money to start off with, you're probably going to be good. And if not, as long as you have a decent amount of time in front of you, give the portfolio time to compound, you'll also probably be good. But regardless of either one of those, you are going to need solid assets, which is why I want to make this video, especially for newer investors. I remember being in your shoes during the early days, not really knowing where to turn to, not really knowing what to look into. So like I said, I'm going to break down 5 different individual ETFs that all offer various amounts of income and growth. Which, side note, this is one of my favorite infographics I've ever made. It really shows the power of picking a strategy and sort of sticking to it, meaning that a lot of lower yield or lower income investments can offer a lot more growth. And on the other side of things, a lot more higher yielding, higher income investments might offer a ton of income consistently, but maybe won't grow as much. So out of all 5 of the ETFs I'm going to share with you guys, they're going to fall somewhere within this spectrum, of course, and it really is up to you to ask yourself what you're looking for. Now, the first ETF that could be a great one to look into, especially if you're just starting off and looking to build a very strong foundation in your portfolio, is DIVO, or the Amplify CWP Enhanced Dividend Income ETF. Now, DIVO is great because it sort of falls in line sort of in the middle of that spectrum. It offers around a 5% yield, so you are going to get a decent amount of cash flow right from day one. That's because DIVO buys into individual names and then sells covered calls on those individual stocks. But because DIVO does buy into names such as Visa, Microsoft, and other names that do have a lot more growth potential, DIVO has the potential to grow also. Now, as far as DIVO's performance since inception, I'm going to share with you guys all the performance totals of all these different ETFs at the end. But DIVO's offered around 11 or 12% per year annualized, which is not bad whatsoever. Now, like I mentioned, if you are seeking a little bit of income and a little bit of growth potential, DIVO is definitely going to give you both that. Now, another great ETF to build as a foundational position, especially if you're just starting off, let's say you have a $5,000 portfolio, is VIG, the Vanguard S&P 500 ETF. Now, VIG is an ETF that invests in stocks inside the S&P 500 index, representing 500 of the largest US companies, and VIG has been very hard to outperform since inception. I mean, looking at VIG's cumulative performance since inception, this ETF is up over 600%. So that means that if you bought into it during the beginning of VIG, you would have been up so much money, around 6x where you started. Now, as far as growth and income generation goes, VIG is obviously going to offer a lot more growth exposure. It only yields around 1.3%. But still, if you're just getting started off, you're going to want to have a strong foundation and then build whatever you really feel like on top of that. But VIG is a great ETF to look into. Now, the next ETF that could be a good portion, if not the entire foundation of your long-term portfolio building, could be SCHD, or the Schwab US Dividend Equity ETF. Now, this ETF's sort of superpower is that it's offered a ton of dividend growth historically. SCHD yields around a 4% yield starting off and has grown over time too, but this ETF has paid investors more and more in dividend income every single year since inception. Now, just as a side note, if you guys do want to see me dig a lot deeper into any one of these names, that's all I talk about on my channel, so definitely check out some other videos. A few more ETFs to go through that could be great additions, if not the entire foundation of your portfolio if you're just starting off, is DGRO, the iShares Core Dividend Growth ETF, another great ETF that offers dividends and that offers a ton of dividend growth. DGRO, just like the others, has offered a massive total return since inception, which I am going to share with you guys here in a second, but around 220%. DGRO is a great dividend growth ETF that is going to give you exposure to high quality underlying names that have either grown over time, have paid dividends, and also paid more and more in dividends every single year. Now, last but not least, VIG, the Vanguard Dividend Appreciation ETF, could also be an amazing foundational position. This ETF offers exposure to very high quality names, very diversified at that, over 300 different individual stocks within this ETF. Again, tons of names that not only have grown over time, but also paid more and more in dividends too. So again, as far as a foundational position, especially if you're starting off without that much money, names like these are going to be potentially very beneficial. Now, even though these 5 ETFs are the ones that I chose to go with for a $5,000 initial portfolio, if of course you're seeking maybe growth, maybe dividends, or maybe a mix of both like I personally do, there's also tons of different great ETFs and stocks across the market that you also should look into. But as you can see, if we look at the total return of every single one of these ETFs I talked about in today's video, they've all offered a nice juicy green total return, somewhere in the realm of 100, 200, or 600% since inception. So what it's really going to come down to, if you're just starting off and you're building your first portfolio in the stock market, you have to ask yourself what you're seeking, whether that's more growth potential or whether that's more income potential. But either way, start off with super high quality, diversified ETFs that have been around for a little while, because even though past performance doesn't indicate future performance, it gives you an idea, at least what's happened historically. So now that I share with you guys how you could build out a $5,000 portfolio if you are just starting off, and a lot of stuff, honestly, I wish I would have known when I first started investing, but I didn't because I wasn't as lucky to come across videos like this. I lastly have a question for you guys down below. When it comes to building out your personal portfolio as of right now, what are some names you're stacking very heavily as a foundational position? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like in it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.